stock of the day because it is in the news today and the market has responded quite savagely. Cettire, it is the online fashion retailer. It's tumbled following an investigation by the Australian Financial Review, which revealed that duties charged by the company on goods were not paid to the government. Also, Dean Mintz, the founder and chief executive, has sold down some 27.5 million shares prior to that news, which represents just over 7% of the company's issued capital. So the share price, taking a look, it is currently down more than 21% on that news. So let's see what our experts look at the stock and perhaps more broadly at retailers in the wake of what we've seen with reporting season. Now, both Ray and Nick, I know you don't cover this stock, but Ray, do you have a view on what you're seeing with Cettire in particular, and then more broadly what you're seeing with retail stocks?
Sure. I guess broadly, we have the COVID lockdown. During the COVID lockdown, the online portion of the sales are far higher. So a lot of online companies, they make a lot of money. So now it's back to a normal level. But when we talk about the normal level, 27% of the sales in Australia are done through online. So this is a big part and it's continuing to grow. These sort of hiccups, not sure, we don't formally cover the company, but, with growth company, is very sensitive, to the news flow because of the involvement of a number of, retail investors and the like. So, these sort of things could be happening, from time to time. But in general, do I think online business is the way to go? I think online business will certainly a place and will continue to penetrate into, the normal market.
All right, so a stock like Cettire, then what would you call on it be? You're simply not interested, given we've seen some dramatic gains in the share price as well?
Well, we need to do a little bit more study about the company. Yeah, we need to sit down with the management, and we certainly before we say we're going to buy, sell, or hold a company, we certainly need to understand the company dynamic a little bit better. We also do a bit of competitor analysis as well.
Well, what would your favourite retailer be then?
Well, in fact, if we look at the reporting season just passed, some of the smaller retailers are actually doing better. So this reporting season is unlike other reporting season. It's actually the smaller company report better result than the large cap. So on the smaller end, we have Lavisa, a retailer. Yes, the like-for-like sales growth is not as strong, but they're growing globally. So they got from the very humble beginning of a handful of stores to nowadays about 800 stores. They continue to grow. They got good management team, and I think this is the company where they can control the margin. Good payback will be some of the company that we like. Yeah.
Nick, now once again I know you don't cover Cettire, but maybe give us a commentary on what we've heard this morning, but also more broadly with retailers.
Yeah, so I mean, Cettire, as you know, we don't cover it, but in terms of what we've seen, there's a question there over how sustainable their margins are with their essentially their revenue model involving customs payments with goods over $1,000. That margin risk. It had margins that were considerably higher than most retailers. If that is unsustainable, then the share price quite rightly will tumble quite dramatically. So this price action is not a surprise. More broadly, it is in a space where revenues have grown quite sharply, because what we've seen, interestingly enough, and this really was highlighted in that CommBank slide in the earnings announcement last year, was the disparity in spending across different demographic groups. And what you have seen is older, wealthy demographics essentially still spending, younger demographics, far tighter household budgets, less likely to be purchasing luxury goods. And so it does play in that sweet spot demographically. So I'm sure that's been part of its success as well. So, but we will be taking a deeper dive into that name. All
right. More broadly though, in the retail space, any sort of favoured stocks?
Well, Breville's the one that we bought. We started buying about a year ago. and at about $22. And we like that name because, you know, it has an R&D aspect to what it does. It's always innovating, especially around coffee machines and other things. And it has structural growth, global structural growth advantages. The other key thing we think is just with the price of coffee. I don't know if you've noticed, but when you go and get your coffee, it takes a bigger and bigger chunk out of your pay packet.
Yeah.
So the economics around having a coffee machine at home become more attractive.
Yeah.
You know, we've seen Nespresso machines everywhere. So it's becoming almost ubiquitous, and this is a great opportunity for Breville, particularly after the COVID hangover. Elsewhere, we don't actually like retail very much, I must admit. We look across the spectrum, we just see downside risk to revenues, and we see valuations that are at peak level relative to the sector. So even, you know, Wes Farmers, which has probably got the highest quality management team, something that we touch on later, but even that's trading on a multiple relative to peers in the sector that's actually the highest ever. So that combined with the macro outlook, which we still think, well, it's, I guess the best way to sum it up is fragile. It's a fragile outlook on consumer spending. Yeah, we don't really see the stars align there for retail stocks.
All right, that is the view of retail more broadly, but specifically with Cettire, which, well, essentially is a no from both. All right, well, let's